The broadcast is now starting. All attendees are in listen-only mode.
Good morning, everyone. Mark Raymakers here with Insurance Agency Marketing Services. Thank you so much for taking time out of your busy day here today to learn about single premium life. For those of you who have been with us or attended webinars with us here in the past, you know that Friday mornings at 10 a.m. Central are always designated as our single premium life webinar day. This is a big part of our business. It's a big part of the industry. We've been doing this now for 32 years helping independent advisors such as yourself. But as far as single premium is concerned, we got started in it before it was kind of the in vogue thing to do, so to speak. Now the annuity carriers are seeing lots of dollars being moved from their block into single premium, so more and more carriers are out there. One thing that we do is we're always looking for a product that's going to be competitive, that's going to work for you. So maybe you run across a carrier you think is someone we should take a look at. I would encourage you to give me a call here, and I'll certainly get with the company and see what we can do to enhance our portfolio. Now, currently, we've got a dozen different carriers we do business with on the single premium life side. And as we all know, one shoe does not fit all, and neither does one product. So we look at the products that are going to fit different niches. And we do have some go-to carriers that seem to fit the bill more times than not. And we can certainly get some information over to you on who those carriers would be. So this morning's webinar is recorded, which is good. It gives you an opportunity to review it once we're done. So after the webinar, what I'll do is I will email you a link to view it again. The question box is open, so you can type in a question anytime that you want, and I will go ahead and address those when I can get those answered as quickly as possible for you. So maybe at the end of each slide, or depending on if it's going to be a question, I'll answer in the process. So again, feel free to type those questions in there. Okay, I'm going to go through a few things with you real quick. Now, I know some of you have been on the webinars here before. This might be a chance for you just to kick back for about 5 minutes, put your feet up on your desk, and just wait till I get to the heart of this. But there's a lot of new folks on here that I don't recognize their names, so welcome. I appreciate you joining us. IAMS, again, has been in the business now for 32 years, and one of the things that helps us to grow our business is the referred producer program. Now, obviously, we do a lot of webinars, we do a lot of emails, like other IMOs do. But one of the things that definitely helps us, like yourself, are referrals. So if you refer an agent to us, they get contracted, we will send you a check for $50 once they get contracted. Then every time they write a piece of business, you're going to get compensated for it. So what we do is we put money into an account, 20 basis points on whatever they write. Each quarter, we will send you a check for their production. Now, that 20 basis points is based on single premium life, or it's based on annuities. It's a little bit different for traditional life products, but nonetheless, you get paid every time they write a piece of business, and that's each quarter. So imagine, if you would, you have 3 producers that write $1 million, that's $6,000 in cash for you. So think of somebody that that, maybe they're not necessarily happy where they're at, or maybe there's, maybe they're just a good friend of yours in the business. It certainly doesn't hurt for us to give them a call and see if we can get them on board. Now, keep in mind, you don't take a commission hit, neither does your referral. You're not responsible for any chargebacks. This is just a referral bonus to you. Our marketing reimbursement, I think, is also something that's very unique. It's something that I really appreciate, especially if I was back in the field then. When I was out writing, I didn't get any marketing reimbursement. But the way it works is, every time you write a piece of business, we put money into a marketing reimbursement account for you, and that sits there until you're ready to utilize it. And here's an example. So if you write $100,000 in single premium life, we'll put $100 into reimbursement account. So let's just say you write one case, $100 goes into an account, and next month you decide you're going to have a customer appreciation picnic. Let's say you spend $200 on the picnic. Send us a receipt, fax it, email it to us, whatever. We'll turn around and send you a check for $100. We'll reimburse you up to 50% of that expense. Keep in mind, it doesn't have to be for that. It could be for your seminars. It could be for your leads. It could be for your postage, whatever it is. We've actually had agents that have remodeled their office based on their marketing reimbursement. So the sky's the limit. Keep that in mind. It's a big part of how we can support you as far as the expense side of your business. Now, notice again, as I mentioned, there's some new names on here. New producers, as you get appointed with us, you write $100,000 to single premium life. You can get a $750 cash bonus or a 2-year website service. So we can set that up for you in about 24 hours, or an iPad. So any one of those 3, if you wanted to get your own website set up without having to write business right away, we can do that as well. There is a fee for that, but you can call in speak with our creative department. They'll get you set up there. You might want to wait till you get to the 300,000 level, at which point you can either take advantage of the Social Security program at 3,000 piece mailing. Great way to get in front of more senior buyers. Or you could buy into that as well. A lot of agents like to earn that, and then they can basically take advantage of that for free. Or there's the $2,000 marketing reimbursement. Or lastly, there's the $1,500 gift card. You might wait to get to the $500,000. We do have some advisors that do that. And by getting to that level, you can choose either the 5,000 piece mailing and seminar coaching with Matt Gill, or 4,000 piece mailing and seminar coaching with Dave Pimper. Both of these advisors are top producers of ours. That's what they do. They do seminar selling. They do a great job of it, and they qualify for all of our trips. In fact, probably 3 or 4, if not more, trips per year based on their production. You might decide to forego that and just take advantage of the Ritz-Carlton travel package. It's up to you, but it's there for your choosing. Our back office support, I believe, is second to none. Again, 32 years in this business, providing all the business building tools and resources that you need. We do all the case design for you, unless, of course, you want to do it yourself. So if you need help with a single premium or traditional annuity, what happens is you call us, we'll ask the right questions, we'll run the illustrations, find the product that's best suited for the situation, email it over to you. You tell us which one you want to go with, we get you the application. Once you write it, you email it or fax it back to us. We scrub it, we get it to the company the same day, and then we case management. So what we do is we keep an eye on that case, make sure that everything's going through underwriting quickly, as efficiently as possible. We follow up with every aspect of the business for you so you don't have to. So that's one of the big things we do for back office support, is that case management. I know I didn't have that when I was in the field. I had to do it myself. So this is a great way to get you out of things that don't make you money and into things that do, which is selling and prospecting. Okay, so our creative marketing department, if you're not taking advantage of that, I would certainly encourage you to do that. We do everything from A to Z in this area. I'm going to go through this real quick. So any type of brochures that you want, if you want a logo, if you want branding done, we put that on all of your stuff. We can help you with social media marketing, whatever it would be, email campaigns, drip campaigns, you name it, we can do it. If you have a thought, you want to look at some stuff that they've done, it's all available. But I would certainly encourage you to call our creative department to discuss some of your marketing ideas, and certainly do whatever we can there to help you out. And I can tell you that agents have done that. They have seen a bump in their marketability as well as their sales. Our website, if you haven't seen it, is www.imzinc.com. Certainly encourage you to go out and take a look at that. Everything you could possibly want is on the website. So let's just say that you're working on the weekends, or maybe you're working after hours. I know a lot of you sometimes have appointments after we're closed. So the website is designed to keep you in production when we're closed. And you can call our office here from 7:30 a.m. to 5:30 p.m. and get someone that's going to help you. But everything you need is out there. So certainly encourage you to take advantage of that. At least just become familiar with what's available to you out there. The retirement analyzer. This is something that a lot of advisors will ask, well, do you have a software program that can help me do a better job of planning with my clients? Of course, it's the retirement analyzer. It's a pretty comprehensive program. I'm impressed with it. You're going to spend some time gathering data. If you have trouble turning the computer on, this probably isn't going to be for you. And I kind of half tongue-in-cheek say that because there have been some advisors that they just unplug their computer from the wall because they've told me they're not really quite sure where the shutoff switch is. So, but this is a great program. Certainly, I would encourage you, if you're looking for something like that, to contact Annuity Marketing. They've got basically the key to that particular program. So keep that in mind. All right, something that we've done here, and I'm going to put a couple of polls out there, probably should have forewarned you, but this is a real quick yes or no. So just real quickly, if you'd mark yes or no at this particular poll, I'm going to explain what we're doing here. So with the DOL, we created our own IMS Wealth Management team here. And this side company, our sister company, handles everything from, everything you can think of. If you are an advisor right now that has a Series 65, you're selling funds, you're managing money, selling stocks, bonds, whatever it be, we've incorporated that into our business. So the nice thing about coming to IMS Wealth Management is now you can do everything under one roof. So you don't have to have a bunch of different places to go to. I know a lot of advisors have complained about feeling like they're jumping through hoops. They're being, they kind of got the thumb on them. They're handcuffed to them. Their fees are out there. The commissions are low. If you have any questions, if you'd like to visit with someone on the IMS Wealth team, just mark yes. What they'll do is they'll give you a call. They'll discuss all the structures. They'll discuss the services. They'll answer questions about DOL. They'll answer questions about taking a series exam, and we do sponsor you for that, so we can help cover the cost of that. So one of the things that I've seen and I've heard and I've learned is that the more things that you can provide to your client, the more likely you are to get them and keep them as a client. So this is kind of that three-legged stool thing. Maybe you don't want to take your Series 65, but you also want to be able to refer a client over and get paid for it to manage their funds. We can do that as well. So there's a lot of things I'm not covering, but I would just encourage you, if you have some interest in discussing, the potential of managing money, or anything, even if it's DOL related, just call Mark Yes, or if you decide later, you can call our office and we can connect you with one of the fine folks over there. Okay, I'm going to close the poll out. Appreciate you marking on that. So here's something else we're real big on. I noticed some of you on here this morning have actually been to our Life Annuity Academy, but we're real big on training, and you'll notice that Monday through Friday, we've got a webinar going on. And so that's part of the training process. I feel, and we feel, that an educated advisor can be more successful in uncovering opportunities that maybe one who does not invest in their time by getting training would gain. So this poll here I'm going to put out real quick. This just simply is a yes or no. Oops, I'm sorry. I think I clicked the wrong button. Let me try this again. There we go. Okay, so yes or no on this one again. So here's what we have. We have a Life and Annuity Training Academy. We've already completed 2 this year. I believe we got 1 more, maybe 2 on the agenda here. So here's what happens. We pay for your airfare. We pay for your meals. We pay for your lodging. We bring you in. Either it's going to be in Omaha or it's going to be in Des Moines, our next event. Now, what we do is we bring you in on a Wednesday. So what happens is Wednesday evening, we get together. We have a meal. We have a few short presentations. We do a full day training on Thursday and a half a day training on Friday. So if you're interested in this, if you want to attend or maybe you want to know more, all you have to do is mark yes, because what we're going to do is we're going to email you an agenda, we're going to email you an invitation, and then we're going to let you know what the dates are. So if you're interested, all you need to do is just mark yes. We have speakers come in from across the country, and they're going to talk to you about some of the top sales ideas that have made them effective and successful. And these are really true quality presentations. We also have some discussion on there's products, but it's not all about product. It's about utilizing different products to increase your sales, whether it be through annuity sales or life sales, or maybe you are selling just annuities and you want to have some, incorporate life into your business, and vice versa. So, really, this is a great opportunity for you to take advantage of some free training. And probably we're looking at maybe August or September timeframe. So coming up here soon. And it's again, it's an all expense paid opportunity for you to pick up some great new sales ideas. Not getting a whole lot of response here, which is quite surprising. When we do these, I constantly hear that this is the best training event that agents have attended. And again, we've been doing this for 32 years now. And we have seen a lot of advisors turn the corner, grow their business tremendously after this. And so, if you, the best investment you can make is in yourself, right? So I would certainly encourage you to, if you decide after the webinar that you want to know more, just call us. We'll get you out the information on that. Okay, I'm going to close the poll out. I'm going to move on. Obviously, you're all here to learn about some great things like single premium life. So real quick here, we do have our IAMS 2019 Marketing Summit. This is going to be qualifications from January 1st, 2018 to June 30th of 2019. The trip dates are August 25th through the 29th. This is for advisor and guest, and we're going to go to Naples, Florida. And you can see down here the different qualification. Now, if you were to just specialize and just sell one of the products here, annuities, MedSup, single premium, traditional life, or long-term care, you can see what it would be by product line only. But keep in mind that everything that you write goes towards that particular trip for you and guests. So love to have you there. It's a lot of fun. So, okay, let's jump into what we're here for this morning. This is selling single premium life one step at a time. One thing that I do see a lot of is advisors have maybe started in life insurance years ago and they just got into annuities because it was quick, it was easy. The commissions used to be really good, right? Now they've come down a little bit, obviously, but they're no longer dealing with the underwriting process. And so a lot of them are kind of in the mindset that it was difficult to get cases through underwriting 10, 20, 30, 40, 50 years ago. And so they've kind of gotten away from it. And there's that thought in their mind that, gosh, you know what? Underwriting is pretty tough, but we're going to go through that real quick here this morning and show you how simple it really is. We're going to talk about why it is so popular. We're going to talk about some general product information and where to find the funds, because I get that a lot. Well, who's a good prospect? We're going to talk briefly about the sales process, again, underwriting, and we're going to show you some case scenarios that we've actually had that have come into our office and have been approved. So let's go through why so popular. Well, you probably have seen this number up here, about $1.4 trillion in assets being passed to the next generation. I've seen numbers higher than that. The point is, there is a lot of money out there that seniors are going to die on and they're not going to live on. And so what we've really tried to educate is where those dollars are at and show them that there is a better way to leverage those assets, not only for the client, but also for the beneficiary. And that leads me to the next point, the tax-free wealth transfer. You stop and think about it. When your clients have money sitting in an annuity, for example, and they pass away, there's growth on that, right? Well, with that growth comes taxes. So if they die on that annuity now, for example, whatever growth is in there is going to be passed on to the next generation. So of course they're going to get a nice chunk of money, but it's also included in their ordinary income taxes. And so with that said, when those beneficiaries receive that money, more times than not, statistically, they are in their highest earning years, which then means it could affect all of their income, right? Well, we put them in the next tax bracket potentially. So by putting that into a single premium life policy, it's not going to go tax-free to a beneficiary and really provides them a lot higher value. So keep that in mind. The high cost of long-term care. We've seen long-term care companies getting out of the market because it's hard to price for, right? And not only that, but you see a lot of those clients that decide, hey, you know what, if I'm not going to use this, I lose all the premium I put into it. Kind of reminds you of your home insurance, right? So that's a big part of it. With long-term or with single premium life, the long-term care benefits are part of the policy. If they don't use it, it goes tax-free to beneficiaries. It's also hassle-free. Excuse me. So what I mean by that is it's easy for the agent. There's not a lot of extra hoops to jump through. I say that there's really no compliance, but in some respects there would be if you're utilizing a plan that involves a annuity. So we do have a product that you can actually move qualified funds or funds that have a lot of growth, a lot of taxes on it, that they can move into a SPL, which then funds the life insurance policy. The other thing is there's no exam, so they're very simple. It's a paper application, it's a phone interview, that's it, very simple. Top commissions, so think of what you get paid on your annuities today and add 2, 3, 4, or 5%, maybe even more on top of that. We have single premium products that pay up to 15% commission. So think of those annuities that you've written in the past or that you've come across that maybe hadn't written, but in reviews, you see them out there. No one's getting paid on those anymore, and they're sitting there to be paid to a beneficiary one day when they die with a tax tag to it. So keep that in mind. There's also up to 3% guaranteed interest on some of these plans, so much, much better than they're going to get into CD, and even competitive with a lot of the annuities that are out there today. Again, the tax deferral, that's another thing to think about. Once that money is moved from an account, an annuity, or a CD, or whatever account that they're getting taxed on every year, that's off the table. It goes into single premium life. There's no taxes they're going to do as that money grows in that particular account. And again, as I mentioned, new commissions on old annuities. Maybe you've got a client out there that maybe you don't know. Maybe they don't know for sure if they're going to need the money. It's kind of looking like they won't. But what you can do is you can move that annuity into the single premium life. Let's say 7-10 years down the road, now you're past the surrender period, the client needs money. You can always 1035 money from a life to an annuity, but you can't 1035 annuity to life, right? So you at least have the option. There's that liquidity, and there's their confidence in knowing that they are in control of their money. So let's look at some general product information. Well, we've got most of the carriers today will issue anywhere from age 50 to 85. That's a pretty good standard age range. But we do have some carriers, and I need to actually correct this. Some issue from 0 to 95. We now have a single premium carrier that'll actually issue up to age 95. The maximum premium is going to vary by carrier, but what we'll see a lot of them, they're going to base it on the net amount of risk. So the death benefit minus the premium is what the net amount of risk will be. And the maximum death benefit, some will go up to $750. We do have one carrier that'll go over $1 million in death benefit. So That's kind of the maximum premium or death benefit. Minimum premium, again, that always varies by carrier, but the lowest we can go is $5,000 in face amount. So whatever it would take to purchase a $5,000 policy, but most of the carriers are going to be anywhere from around $5,000 to $10,000. Now we have some that go up to $25,000 minimum premium. This is what I really like is the underwriting. So when I talk with an advisor for the first time about their prospect, they think that they're not going to qualify right away because they had a heart attack or they have diabetes. I get that question a lot. But what happens is, obviously in the last 10, 20, 30, 50, 100 years, people are living longer, right? So I know when I got started in the business, if you had a heart attack or cancer, you probably weren't ever going to get coverage, or it would be a long time before you could. That's not the case today. So most of the single premium products are table 4 as a standard issue. Now some will go up to a table 8. That's big because, again, stop and think, years ago when those people were getting declined, they're actually getting approved now at a standard rate. There's no physical exam that is required, so there's no exam. You simply do the paper application, you do a phone interview. A lot of the carriers today will actually approve it on the spot, so it's a point of sale. Some are going to wait. They're going to have you complete the application, do the phone interview, and then they may order medical records. So there's a little bit of time in underwriting, just depending on the carrier that you go with. But generally speaking, you're going to see that most single premium life carriers underwrite based on mortality, not morbidity. So what does that mean? If they can qualify for the life insurance policy, they now have a long-term care policy incorporated with that life contract. There are some carriers out there that'll do both. They'll underwrite mortality and morbidity. So maybe your client has really bad arthritis in their knees, or maybe they have some health issues or a bad back or whatever it would be. If they don't qualify for it from the morbidity standpoint, they get declined. Now we have carriers that are like that. So I'm just going to kind of get you to think real quick here. The Lincoln MoneyGuard product's been around for about 30 years. Very popular product, but they're a little bit tighter in underwriting. So you want a good, healthy client for that. If you've had a decline with them, we've been able to get them underwritten and approved with some of our other carriers. So maybe keep that in mind. So some of the benefits to think about. So liquidity is a real big deal to a lot of seniors, as you know, because they're concerned. They remember the policies they bought 50 years ago or 40 years ago when they got married, and it was kind of the wedding policy. They had to die for anybody to benefit from it. So now today's products are very liquid. They have a return of premium feature, so you can put your money in the policy. Some of them will allow them to take all their money out after the first year or even within the first year. Some of them are going to be 2, some of them are up to 4, maybe even 5 years. So the return of premium is there. It gives them that comfort, that confidence of knowing that's still my money. I can take it anytime I want. Again, there's long-term care and home health care benefits on there. So let's say your client puts in $100,000, they get a $200,000 death benefit. That $200,000 can be paid to them for long-term care or home health care expenses, and it's just like a typical long-term care, the inability to perform 206 ADLs. There are also carriers out there that will allow up to a 10% free withdrawal. So carriers that we have, there's a few of them that we have right now, that will allow that client to take a 10% free withdrawal. Again, that liquidity, that control, it's not locked up in life insurance policy like the one they bought 50 years ago when they first got married. And they can transfer qualified and non-qualified assets into one of these plans. So that's a big deal. There's a lot of dollars out there. As you know, you can probably think of some clients right now that have money in a qualified account that, they have to take the RMDs out, but they don't need it. They just stick it in the bank. So what we're doing is we're taking that and we're putting it into one of these single premium hybrid life products. So where do you find the funds? Well, we have created, or I should say, we've created ourselves as well as some of the carriers that we use have created some fact finders. And so one of them that I created here this year, I kind of refer to it as the senior questionnaire. So if you want to know what that is, if you want to see it, I can provide that to you. But what it is it is a form to help kind of pick at some of the emotions. What do your clients feel? What are their concerns? And also kind of where some of those funds are at. So it's going to help you to determine who's a good prospect for single premium life, as well as to help you find assets that you may not have found in the past. So that's a great way, some of those tools. The other thing too is look at those clients. If you've got a CRM, so a client management tool that you can put in and say, show me all of the clients that are 70 years old. And I say that because this is the year they have to take RMDs, right? You get in front of them, talk to them about that. Do you really need those RMDs? because again, we can roll those into a combo product, which is a single premium immediate annuity and life insurance contract. Once it's rolled into that particular product, it's on automatic pilot. Your clients don't receive a check. They don't have to write a check. All they receive is a 1099 at the end of the year. And once that SPI is generated, it goes directly into life insurance every single year until the SPI is liquidated. So keep that in mind. Again, I mentioned 10% free withdrawals, I think, before. So a lot of times what happens is you might have a client with a large annuity. They're not touching it at all. They don't know that they will. But this is a great way for you to take a 10% free withdrawal. Maybe they got a $500,000 contract, take $50,000, put in a single premium life, get a $100,000 long-term care life policy. Okay. Again, I already mentioned the RMDs, but maybe you've got a client that's already been taking them. Okay. And so they've been taking RMDs for 2, 3, 5 years. Okay. Putting it in the bank, it's sitting there. Here's what we do. We'll take that money that's in the bank account, put it into one single premium plan, and then we can even take the balance of the account and put it into another single premium life policy. It's set up perfect for the client. It's set up perfect for the beneficiaries. If you have any questions on any of those, of course, you can certainly call me when this is over. Underperforming policies. I know when I got started in the business, UL policies were paying over 9%. Some of you probably remember when it was 10, 15, or whatever it be. I've even heard of some that were higher than that. The point is that a lot of those policies today are underfunded, so they're in trouble. And so your client will get a statement that says the policy is going to lapse in 5, 10. I've even seen them, they're going to lapse next year. Here's an opportunity for you to take those contracts and roll them into a single premium policy and protect it. Make sure they still have something that's going to cover their final expenses when they pass away. And if you're not asking a new prospect or existing client when the last time was they reviewed their life insurance policy, you may be leaving a tremendous amount of money on the table and leaving your clients exposed to losing all the cash they put into their contracts. Here's the other thing too. When your clients retire, as you know, more than likely they know that they're going to be on a limited budget, and more than likely they're going to want to see what they can to true up any money that's going out the door that they would prefer, or maybe would like to stop paying on, and life insurance is one of them. So a lot of times what we're doing is when they retire, we're taking those policies they've been paying premiums on for 30 years or 40 years, we're rolling it into a single premium life policy, we're guaranteeing a death benefit, and we're providing a long-term care benefit that they currently probably do not have. So again, ask that review. Do you have any insurance policies we can take a look at and see if we can kind of solidify a program for you that's best suited for your retirement years? Underperforming CDs, excess checking or savings accounts. I'm sure that we're all asking about that. But one thing that I did learn is people have a lot of money in their checking or savings accounts that just don't really make sense. I had a client that had $1 million in a savings account, a checking account. I had one that had $850,000 in a savings account. If we're not asking what their balances are, we might be leaving money on the table. So be sure you incorporate that as well. The market's huge. I think anybody who's in this business has an opportunity to write single premium life. So I'm going to go through this real quick. Obviously, the number one place, the biggest place that we see money coming into single premium is from annuities. So we want to find those clients that have money out there that they're not going to live on. And some of this stuff I've kind of already talked about, distributions or taxes ordinary income. So once they want to, or they found some money that they want to go ahead and put in a single premium, or maybe money that they're not living on, they have to surrender that account to put it in the single premium life, right? So they're going to pay taxes on the growth. But here's the thing that's attractive. They get an increased face amount over and above what the annuity value is. And a lot of times with that, the living benefits offset the surrender charges, so it's more attractive. We just need to crunch the numbers and show it to them. And in the end, it's better for them, it's better for the beneficiary, and it's certainly very positive for you because you get paid for it. Again, I already talked about the bank to checking, savings, CDs. Let's skip that. Medicare supplements. I have agents that have actually gone out and purchased Medicare supplement leads, got into that market to sell single premium life. So this kind of comes down to where now they're retired, they're buying a med sub plan, and it goes to the previous slide that I mentioned about consolidating and having things paid up because now they're on a limited budget and things are going to go up, right? Taxes are going to go up, health, and all the things in their life are going to go up. So let's see if we can help them free up some dollars and consolidate and put it into a single premium plan. I already talked about the imploding UL policies. One of the things about that too is when you put in a single premium life, those old ULs didn't have the guarantees like some of them do today, which again, they're pretty limited today, but now they have a guaranteed paid up policy, and they also have the benefits that come along with it. One of the things that I do see is long-term care agents out there. We have some that are with us that'll periodically write a plan. They'll submit an application. The client gets declined for long-term care, but they do have a chunk of money that they can move into a policy. So if you're selling long-term care plans, keep that in mind. If they get declined, all they have to do is qualify from a mortality standpoint. We talked about the use it or lose it. And a lot of folks too can't afford to spend $400 or $500, $600 a month to get a long-term care policy, but they do have a chunk of money sitting somewhere that they could roll into a single premium plan. So here's the sales process. Quite simply, finding the assets suitable for single premium life. So after you've done the review, after you've taken advantage of some of the fact finders we got available here, call us, and what we're going to do is we're going to ask questions. What is the main objective? A lot of times I just want to pass assets on, more favorably to my beneficiaries. Long-term care is a secondary concern, or vice versa. Maybe long-term care is their main concern. We're going to run illustrations with that in mind. We're going to find out about your client's health conditions and determine which care is best suited for that. We'll shoot you over the illustration, the brochures, everything that you need for that. And you know what? Here's the other thing that we do. I've been on a number of calls with agents when they write their first case. So what happens is you can call me, put me on speakerphone, and I'll just sit there quietly. If you have a question, I can answer that. If the client has a question, I can answer it. I've actually also ran illustrations while in front of, shoot it over to you. You can pull it up on your computer, and we can make any adjustments that we need to while you're there. We'll provide you the application as well. Once that's done, all you'll have to do is call a toll-free number, which is on the cover page of the application. So it's very simple. You can't mess this up, I'm telling you. Once you're done with that, you've completed the application, you've done the phone call, it's a toll-free number. What they're going to do is they're going to ask you to introduce the client. They're going to ask you some information. They create an electronic file. They're going to ask you to pass the phone over to your client, your applicant. They're going to go through the series of health questions with them, give the phone back to you, and they'll tell you right there if they're approved or declined. Now, some of the carriers don't do a point of sale. That's okay. Hang up the phone, email or fax the application, or mail it to us if you like, whatever is easiest for you. We scrub it. We'll call you back if there's anything missing. We'll make sure that it's all completed and get it to the carrier the same day. Okay, I've already talked about the point of sale versus, not. And then what happens after that? We case management, as I had mentioned before, so we manage that for you, get it through the process, and then you wait for the policies. The commissions are then deposited into your account. Okay, so who are some of the IAMS players? This is a pretty good, strong showing of most of our single premium carriers. There are other ones that are not on here. Assurity Life is one of the companies we first got started with on offering the single premium life, but you can see all the different carriers that are out there for single premium. Now, one of them I mentioned on here is National Guardian Life. Theirs is a little bit different. Theirs is a great way to protect assets from Medicaid spend down. We can issue up to age 99 lump sum. So that's a good share of who we've got available. There's a few other ones that are not on here. There's a few of them that I'm actually trying to get on board with us here. So real quick, here's the health questions. This is from one of the applications, one of the carriers that we do business with. It's pretty simple. You'll go through the process. You'll go through all the applications pages. And then when you do the phone interview, most of the carriers, this might sound quite redundant or ridiculous, but most of the carriers are going to ask the exact same questions that you did. One of the things that they found, and one of the things that I found, is a lot of times the client will tell you one thing, but tell the person on the phone something different. This also can help determine whether or not there's any issues of dementia, believe it or not. So it's very simple. More times than not, the answers are exactly the same, so you don't need to be concerned about that. Okay, so real quick here. Underwriting single premium life. These are some actual cases that we've had come in. So this might kind of open your eyes up to thinking, you know what? maybe I should give it a shot here and not try to underwrite it myself, because things have come a long ways, baby, as they say. And that's what underwriting has done. People are getting approved at greater rates than they were years ago. So here's a female, age 83, type 2 diabetic on blood thinner medication, 2 blood pressure meds, 1 cholesterol med. She was issued standard. A male, 78, had kidney disease, type 2 diabetic on insulin, and had gout, issued standard. Female, age 68, with colon cancer in 2004, edema, high blood pressure, bone loss, standard. Now here's some other examples. These are going to be probably in your level 2, which would be like a table 8, so to speak. So heart attack after 2 full years, or 2 years of full recovery, bypass or angioplasty after 2 years, cancer in remission after 2 years, Parkinson's after 2 years, no treatment, stroke after 2 years, no treatment, pacemaker after 5 years. Those are some abnormal risks that were approved in the level 2 category. So here's the point of this. A lot of times when I'm talking with agents, they say, they'll never qualify. Well, tell me their health conditions. We get them approved. So don't just automatically assume that your client's not going to get approved. Give us a call. Let us ask you the questions. Let us call the underwriter and see. We certainly don't want to submit an application without trying to pre-screen it, so to speak, because then, unfortunately, you can get egg on your face and it can be very frustrating. And keep in mind, morbidity versus mortality. If your client is insurable for life insurance, they'll be able to take advantage of the long-term care benefits that come with it. And that really, quite honestly, is one of the big draws on that. So let me just give you an example here. If you put it into perspective, if you're not doing reviews with your clients, this is where we see a lot of single premium come in when agents are going back out and reviewing and talking with their clients. If you were to just write a $100,000 case per quarter, just one per quarter, or $400,000 in a year's time frame at let's say an average of 9% commission, that's an additional $36,000 you're putting into your pocket. And what I do see a lot of times too is that advisors will just write an annuity and maybe get 6% commission or even less, because it's the path of least resistance. It's easy, it's comfortable. I know it's not going to have to go through underwriting. But let's just imagine if instead of automatically putting into annuity, you stop and think, you know what, I'm going to double check and see, does this client really need this money? Maybe it's an inherited asset. An additional 3% on $100,000, yeah, do the math. Is it worth it from 6% to 9%? So it certainly is something to consider when you're going to be writing a plan on somebody, whether an annuity is always the best fit or not. I'll tell you, a lot of the conversations I've had with agents and advisors out there is they say, gosh, I wish I would have known about this a long time ago, or I wish I would have taken the time to learn about this and stop turning a blind eye to it, because I'm thinking it's underwritten, it's going to be delayed, it's going to get declined, it's this, it's that, it's everything else. But if you look at today, one of the main reasons why people file for bankruptcy is a health reason. And it's because they weren't prepared. And so a lot of the seniors out there that have had those issues could potentially be prevented by looking at a product such as this. So I encourage you to consider that. I encourage you to call us when you think you have a case that might look like single premium life. And remember, the first one's always the hardest, right? I mean, remember the first case that you wrote, kind of difficult, probably made you sweat a little bit. But once you get through the first one, it really truly is easier after that. And remember, we're always available, that if you go into an appointment, someone comes into your office, put us on speakerphone. I've done it a lot. I've been in the field myself. I promise you I won't ever embarrass you. And I'd certainly like to help. I've closed some pretty big deals over the phone before. So let us assist you with that. I don't see any questions in the question box. So if you have any, go ahead and type those in there. Keep in mind, I will be emailing this webinar over to you later today. I will be following up with a phone call to see if you have any questions. I don't know if you've had any prospects or clients that have come to mind that you've jotted their name down on a piece of paper. I would certainly encourage you, before you hang up the phone here on this webinar, stop and think of somebody that you know that might be a good fit, and we can certainly talk through it. Remember, you don't always have to move all the money over. We do a lot of partials. So in other words, if you've got a client that's got $100,000 annuity, for example, instead of moving it all over, take 50% of it. Say, hey, you know what, let's start with this. Let's put $50,000 in, and let's make sure that we're getting this first concern of, some long-term care benefits set up for you. Because keep in mind, think of it this way. So you might think, oh, they'll just use a $100,000 annuity to cover their long-term care expenses. Well, let's say you took the $100,000 and put it into single premium life. Now you get $200,000 for long-term care. So ask your client, what would you rather have for a long-term care plan? The $100,000 annuity or the $200,000 life policy? And keep in mind, over here on the annuity, if you leave it sit there, it's going to keep growing. And what's going to happen is you're going to pay taxes on that money first before you can use it to pay your long-term care. Whereas a life insurance policy, it's coming to you tax-free, and it's potentially twice the value. And oh, by the way, if you don't use it, this $200,000 over here now goes tax-free to your beneficiary. But the $100,000 annuity over here, your kid's going to pay some taxes on it. So it won't be quite $200,000 or $100,000. So what would you rather give to your kids, or what would they rather inherit? Looks like I got a question here. What's available in New York? I do have something available in New York for you, Meyer. It's actually one of the carriers that I mentioned here earlier. And I can certainly give you a call, and we can get you some information over on them. But yeah, we do have a carrier and a product out there, very strong, a great rated company, and some great benefits too. So I can certainly give you a holler on that. I'll get you some details over here after the webinar this morning. So it looks like the question box is empty. Apparently I just addressed all the questions as they came along here. If you have any further ones, you can certainly call, but remember, I will be reaching out to you. This is kind of funny. I'll leave you with this. I have an agent who's a really good friend of mine in Ohio, and he was an annuity producer, still is. Started selling life insurance 20, almost 30 years ago, I think it was. And I caught him on the phone one day. He was calling asking for help with annuity, and I mentioned this to him. Long story short, in 1 year, he wrote over $1.3 million in single premium life. I'm going to say it again, $1.3 million at 15% commission. Imagine that. He made a lot of money that year, and he and I are really good friends from that. So, and, obviously, there's more reasons than one for being good friends, but you know what? I really helped him make a lot of money and helped a lot of his clients. And so this is a good opportunity for you as well. Let's talk further today. Call me if you have any questions, 800-255-5055. Looks like we got a question that came in here. You know what, Meyer, is it better to roll or to sell to a settlement company? Well, personally, I think it's better to put it into an insurance policy. I really do. Because you get a pretty substantial bump in value. If you sell to a settlement company, I think you're taking a reduction, really. And I don't know if you're thinking taking it from another life policy or money from an annuity. I'm not quite sure exactly what you're thinking, but usually when we're going to put into single premium life, we're going to get a bump in value. That's why we're doing it, for one reason, because we're going to be, yeah. So if you're so a life policy, if you're looking at moving a life policy, is it because this particular person is in dire straits and they need money? If that's the case, they are probably not insurable. But if you have somebody in mind, let's talk about it. Let's do a comparison and see what makes sense. Appreciate your question there. Okay, folks, I would say we are going to wrap this up here this morning. Got it done in under an hour, which is my goal. Try to keep it short and sweet and beneficial for you. I'll be reaching out to you. I look forward to the opportunity helping you out with your first or your next single premium life case. Have yourself a great weekend. Stay cool. We'll talk to you soon.